Hey guys, it's time of year, the fall feast of the Lord, and it's time for a financial problem. Usually, it's like a mini crash. Last year, actually went into a bear market. This year's looking kind of bad again too. What I wanted to do is talk about the kiss of death. This is a concept that was taught to me by Alessio Rostani on his YouTube video, and we're looking at another kiss of death. Yeah, we sure are. We had one last year, getting set up, and now it looks like it kissed it now. Um, so I want to explain to you what the kiss of death is. Also, I wanted to show you some technical analysis about price action, and showing why we could be at another major decline, maybe go into a bear or for sure a recession, and definitely a mini crash. By the way, today's September 29th. It is the Feast of Trumpets, assuming the first visible crescent of the new moon shows tonight. Yeah, Feast of Trumpets. Blow your horns. That's what it's about. The Lord blowing his horn. We need to remember this, that when the Lord comes again, he'll come with the trumpet. So let's look at the stocks. I think the stock market is the rises and falls, the bears and the bulls. The major ones correspond to events in the world, news events, real news events. So I wanted to show you the big picture going back to 2001, and then we'll go into this year, 2019, see what's going on there. So what I'm looking at is called the Russell 2000. There's 2,000 different stocks. This Dow Jones only has 30, and the S&P 500 has 500. So if you're a trader, like a day trader or a swing trader, and even an investor, most people look at the S&P 500, but the Russell 2000 has 2,000 stocks, and I think it's some ways better. It's Alessio Rostani says it's a leading indicator, so that it reacts to the market sooner than the S&P 500 or the Dow Jones does. And the reason for it is because it's called a small caps, 2,000 stocks that are small caps, caps being capital. So in other words, I don't, there's small caps, medium caps, and large caps. I don't have the numbers memorized, but it's something like if you're over $100 million in assets, you're large caps, and if you're under 25 million, you're small caps or something like that. Anyway, so Russell 2000 has 2,000 stocks it's looking at, and so it's a leading indicator. And if you look at the right-hand side of the display, you can kind of see that we're on a downward trend. And if you look at it like this, it's probably becoming a little bit more clear. It's on a downward trend. But let's look at the big picture again. So right over here on the left-hand side of the screen, this is when the Twin Towers fell. And you'll see this big bar here. That big bar is big compared to the stuff that happened before it. 700 points, 770 points or something it dropped in the month of the Twin Towers. But you can notice it was having trouble for, almost 2 years. It also was on a decline. And so this pattern here where it's kind of up, down, up, down, up, down, up, down. But the highs, this high here, then you got is higher than that high, and that anyway. So the highs are becoming lower, and the lows are becoming lower. It's in a downward trend. Okay. So the next major one, this is 2001, right? The Twin Towers was 8 years later, which y'all probably remember. It's in your memory. Was in 2008, and on September 7th, Fannie Mae and Freddie Mac tanked and were bought out by the Freds. 8 days later, Lehman Brothers went bankrupt. And then the House of Representatives rejected the Emergency Act, but the House passed it. This is where the Dow Jones dropped 770 points in a day right there. That huge bar right there. That was the huge one that he just went up to that point. And this red line here is the 21-day moving average. This red ziggy-zaggy line. Now we go back or up more recent times, and in September of 2018, this was when the trade war started with China. Not necessarily started, but the actual money, the tariffs were actually applied after months and months and months of negotiation between President Xi and President Trump. Specifically on September 24th, U.S. tariffs on $200 billion on Chinese goods, for a total to this point of $250 billion. And I think the whole trade with China over a course of a year is like $550 billion. So you can see that this $250 billion was significant. It was 50% of the total. And so what the U.S. and China have is like they have lists of exceptions, things that wouldn't be tariffs. But unless agreements can be made, then even those lists get shorter and shorter, and more tariffs applied. I think at this point it was at 10%. So the tariff was 10% of the price of the goods, and now Trump could raise it. I think now it's at 25%. I don't know for sure, but this was the major September 24th. $250 billion was 50% of the total trade going between the goods being imported by the United States. China retaliated by doing a $60 billion on U.S. goods. I don't know how much billions that China imports from us, but that I don't know. I know they do import a lot less than us. And then on October 30th, the U.S. reportedly prepared to announce tariffs on remaining Chinese products. They had some kind of a schedule, like in January, more tariffs would be applied or whatever. And so maybe some of these lines here are the idea of more tariffs are going to be applied by the U.S. on Chinese goods. So you can see the major news events are happening. And what you should look at, there is actually in the last week, right on time for the Shemitahs, the fall feasts of the Lord, some major financial issues have occurred again. So this article on Fortune.com talks about the repo market. Okay, so the last 2008 financial crisis had to do with the housing bust and boom as well, right? So then there was the bank in 2001. It was a bank crash. 2008, it was also bank crashes because houses were being repoed, and the banks weren't getting the money for their loans. And so now we got the same situation again. More housing repos. In this case, for $400 billion. This was from Fortune.com. And so what's happening is the federal government is like giving the money to the banks in essence. In essence, they might say, well, we're not really giving it to them. We're actually buying the houses themselves. So we're actually buying the houses. So we're not giving the houses to the banks. But really, they're bailing out. And so in 2008 was the big bank bailout under the last few months of President Bush's presidency, and that bailout has to fall on Bush, not on Obama, by the way. Well, we're in another situation now, and then you should notice that Glenn Beck, he has a scary explanation of this stuff too. He goes into the details, and what the deal is that when a bank makes a loan, it has to have a certain minimum amount of money in the bank. For example, I can't remember the exact numbers, but it's something like 10 to 1. So if the bank gives out somebody $100,000 loan to buy a house, then the bank has to keep in the bank $10,000. So they give out a loan for $100,000, and they get interest payments back on the house, but they only have to keep $10,000 in the bank, right? Only $10,000 of the $100,000, which is a good deal for the bank. Well, now these banks are not able to do that. So what the banks do is they like take loans against other from other banks or wherever they can get loans from, just overnight. So it's called overnight loans to pay off. So to make sure they have that amount of money in the bank. And if they keep on doing that, that means that particular bank has bad credit. And pretty soon it's like, if you're another bank, you're not going to give these other banks overnight loans unless you charge them higher interest rates. So it's like, now the banks are charging other banks higher interest rates for these overnight loans, and they can't do it, so the banks are going to go bankrupt. So now the Federal Reserve has to come in and bail them out again. Only this time, it's kind of they're doing it behind the scenes. And so I encourage you to watch Glenn Beck's YouTube. So that's what's going on with this year's Shemitah. So as a result of last year's Shemitah, the S&P 500 lost $2 trillion in October. At work, our 401k crashed for about 4 months. We looked at the chart just a while ago, and a lot of the colleagues at work pulled their money out of their 401k investments. They kept it in the 401k, but they just put it in the account because they had been losing so much money. On October 9th, during that period in the fall feast of the Lord, Hurricane Michael became a second major hurricane of the season, and it became the first Hurricane 5 category to make landfall. This was, as I recall, this is the hurricanes and stuff usually hit on the Feast of Atonement, which is the 10th day of the month. After the first day of the month is the first sliver of the new moon. The 10th day is the Feast of Atonement. Anyways, so that's the first one to make landfall on the continent of the United States since Hurricane Andrew, which was a real famous hurricane. So now I want to talk to you about the kiss of death again. Alessio Rastani just used this 21-day moving average. I also like to use these diagonal resistance lines here, the blue diagonal resistance lines. And so for example, this one, you can see the blue diagonal resistance line and the 21, so we can use them both. But the price dropped down below here, and then it hit the line. The price is kissing the line again, and then it went above it. So this is called a false kiss. Well, here, if you go from this price bar here to that price bar to over here to that price bar, you can draw another horizontal or diagonal resistance line, right? And so right here, the price dropped down below the 21-day moving average and came back and hit it and bounced off. That's called the kiss of death. And it kissed off this diagonal resistance line, right? Came back up and broke through it. So now that part is over, and you can see from here to here is like a year and a half, right? So that's what we have to look out for. That's a situation we might be in right now. Let's look at this one. So it's going up, and the price is above, comes down and hits the diagonal resistance line, goes up, and down, hits it again, comes up, come down and hits it, and then the price breaks through both the diagonal resistance, this is called a breakthrough, and it breaks through the 21-day moving and the diagonal resistance line. Then comes back up, kisses it, goes back down. So this is actually a real kiss of death, because it broke down, comes back up and hits it, and then this next one, it goes down and kisses it, but instead of bouncing back down, it goes up. So this one's a false This one I didn't label, but that is really a true kiss of death. So I could copy it, this one over here, and go kiss of death there, and give it a duplicate that. A little bit hard to see, but that's a real kiss of death. That's a false kiss of death. So now it goes back up, bounces off, it goes back up, gets to a peak, comes back down, and breaks it through. Look at that huge bar. Again, that's because of the tariffs. Anyways, I want to look at just this year again to show you just this year now that we've seen the big picture, and so I have to go to a little bit different something like that. So this is like a year long. Or maybe a little bit more than a year long. Yep, I guess we'll just look at a year long. So you notice that this is a peak here, and that's a peak there. Alright, so we talked about that peak, the most recent peak, is a little bit lower. You can see it better now. That peak is a little bit lower than that peak, and this peak is a little bit lower than that peak. So we could almost draw a line. It's not going to be as good. Well, I guess we can draw that line. Yeah. We can draw a line from there to there. We get rid of that. Okay, we got one here, and one here. So you can see it's a downward trend, right? It's plain to see. And what is also interesting, I'll put little circles here. You have so sorry. I'm trying to highlight this with little circles. One peak, two peaks, three peaks. Okay, there's the three peaks, and it's a downward trend. And there's a thing in trading called price action. And so one of the rules of thumbs is that it's not going to keep on doing this cycle up down cycle forever. And it's a pretty good rule of thumb, but it doesn't always happen. But the rule is this: if the price has come up, hit it 3 times, it's trying to go through, trying to go above it, and it fails. Like it tries once, failed, tried a second time, fails, and tries a third, fail, and you have the money. Let's say you've invested up here, and you've seen it, and you've bought the share right here, and you're wanting to sell it, right, for a profit. So you want the price to be higher, but you see it go boom, hit it once, boom, hit it again. Then you're like, what are you gonna do? Well, you're gonna be worried that it's all over. The price is gonna keep on dropping and dropping and dropping and dropping. That's what you're worried about. So you're going to start selling because you've seen this here, and so what's going to happen is it's probably going to go back down. At any rate, once you've seen this thing happen, three bounces here, that's the end of the cycle according to price action theory. The price is either going to reverse. I mean, it could go down a little bit, break through and hit the line and break through and go up, or it's gonna so from here it's gonna do two things. One, go down and break through and keep on going down this way. or it's gonna go up that way and break through that line. Okay, so either way, something's gonna happen where it's gonna go. It's not gonna keep on endlessly repeating the cycle, and so key points to look at is let me make this a little bit better. If you go from here, connect this point here, that point there, you can see this upward trend here. So, and then you can see the downward trend. So if it's going to break, this is the third time. If it's going to go up, it's probably the price might go down to hit this, and then it's going to bounce back up. Or if it's going to go down, it's going to go down through and break through this line here, one or the other. But bear in mind, we are in the month of September. In September and October, that's when the Shemitah occurs. So that means there's supposed to be a mini dip. And so my bet is on right here. It's going to keep on going down. And it might get down to this point right here. See this line here? This was made in the bigger picture. We'd have to go back further, but connects that point. So I predict that it's going to go down to this point here. Probably it's going to drop there by the start of Trumpets. No, Trumpets is today. The start of Tabernacles, which is the 14th of the month. So in 13 more days, I suspect it's going to get down to here. And that would be a good time to buy in at the bottom of the mini crash. Does that make sense? Now, a recession or a bear market is 20%, a fall of 20%. So if we're here, say it's 1600, 20% is like 300. So 1600 to 300, these are just round numbers, is 1300. So you can see 1300 would be a bear market, would be right there, and it's not quite 300. So right around this value there. Well, I hope that was helpful. Bye.